So there you have it. We got the rate hike. We got our 1% on the Fed funds, widely expected. But look at the reaction in the markets. We didn't even have to wait a day or two for the dollar to sell off. It happened immediately. We didn't even have to wait a day or two for gold to rally. It happened immediately. Not just gold. We saw it in aluminum. We saw it in copper. We saw it in zinc. We saw it in lead. We saw it in tin, all the industrial metals. We saw it in agricultural commodities. They all responded to the rate hike positively. Like I said, rate hikes, I don't even like calling them rate hikes. I call them price increases. They are inflationary. They raise the general price of everything. And they're also net fiscal expansions, all else being equal. Nobody understands that but me. I've been totally correct. In fact, we had a guy on here last week, a commenter on my channel, thought he was very smart. I forget his name. If I remembered it, I would call him out. Said, this guy, meaning me, he might even call me this clown, still thinks that rate increases are bearish for the dollar. Well, guess what, mister? You see the reaction, and it's going to continue to be that way. Rate hikes are inflationary, and you just simply cannot make an argument that higher inflation is positive for a currency. It literally means your money buys less, and there is no way that that is reflected in the foreign exchange rate of a currency as a higher exchange rate. And it's also, like I said, a fiscal expansion, that's the classic printing money. That's what these idiots run around talking about, only they're wrong. They point to the wrong thing. This is, and they have no clue. They don't even know what's going on. So we saw the reaction today. If I was going to say that there was actually two markets that didn't react as they should have, but they will, it's just a temporary non-reaction, I would say is stocks, which rallied, kiting off on their kind of blind enthusiasm, and treasuries. On the latter point, I sent out an email to MMT Trader subscribers advising a position today. If you want that email, just go to my website, pitbulleconomics.com, sign up for my 30-day free trial. I'll send you the email. Of course, you get the report and you can see all the back issues. There's still time to get into that position, but I suspect that stock prices will start to head back down. We may have a 1 or 2 day positive reaction up. Now, the entire orthodoxy of economics, and most people out there, most of you, except for those of you who have been following me for a while and listening and learning, you believe that rate hikes quash or tamp down inflation. Even the Fed believes this, but the Fed is actually generating its own inflation cycle with these rate hikes. You can go all the way back to the very first rate hike, December 15th or December 16th, 2015, and prior to that, there was no inflation. In fact, there was negative inflation year over year. As soon as they hiked rates, that very first time, everything turned around, and the cycle is ingrained now. They're going to continue to drive it with these rate hikes until the point where they crash everything. And the reason why that happens is that prices rise faster than income, and then you get a demand collapse, right? Income can't keep up with prices, and everything crashes back down. So that's where we are headed. For now, though, everything's looking good. I had a lot of Forex positions on me personally that were underwater going into this rate hike, this whole period of the last week and a half where that clown guy was like, chuckling. They're all big time up today, so I'm up. Everything's looking great. So pitbulleconomics.com if you want that email. Otherwise, my call was exactly right on what was going to happen. We didn't even have to wait. I thought we'd get maybe a dollar pop and be able to sell it, but we're already short, so it's fine. See you guys later. Bye-bye.